Let's bring in Larry Levin, Louise Mensch, Mike Murphy, Dr. Barton. Here's the other thing. Of course, we heard from the Fed. The minutes were released yesterday. They're very much in wait-and-see mode. So let me take it to you, Larry Levin. Are they holding the markets hostage?
Hostage? I mean, it's been fairly obvious from a lot of your viewers, traders behind me, Liz, that the Fed is kind of stuck in a corner, and it's certainly they're not going to do anything with rates. They were saying they're going to do something in June. They didn't do it then. They were saying they're going to do something in July. I don't think they're going to do anything then. Obviously, tomorrow with the unemployment report, it'll be very telling, but I don't think the Fed is really going to be able to do anything. And what does that do? It keeps driving the market higher. And we're going to continue to see that. In fact, I think we're not that far away from records, and we'll see those records pretty soon, as long as the Fed stays pat, which it really looks like they will.
So there may not be a rate hike, Dr., even in December. Has the Fed basically not just exhausted all its tools in its tools kit, has it exhausted, Dr., all of its excuses not to raise rates?
I believe, Liz, we might be getting to that point. And, the Fed has continued, I think, in the mental way to form a safety net. People still think if anything happens that the central banks, the Fed included, around the world will come in and bolster the markets. And I think that's one of those things that in all of the purchases with their bond purchases and bond prices right now at all-time high, sky high, all of those things keep us a little bit of a stop under the market that's keeping it from going down. But I do agree with Michael. I think we've got a correction between here and the election, and that's what I'm positioning myself for.
Mike, weigh in.
I think the Fed, hostage maybe not, but I can't wait until the Fed is out of the market. The market is definitely too dependent on the Fed. If the Fed's going to raise rates, you get a sell-off. If they're going to stand pat and not raise rates, you get a market rally. That's not a healthy market. That's not the way the market normally reacts. The sooner the Fed can get rates back to a more normalized range, the better for everybody.
But they're not going to let control of that go away, right? I mean, we're talking more about the Federal Reserve doing their forward expectations and not CEOs in a normal market.
Yeah, they're not, but that's the whole point. This is a normal market. It's the market, and you don't want
new normal.
New normal. You don't want it run by Janet Yellen and the Fed. You want it run by CEOs, right. And when we get there, we're better off.